And I assume, Jenny, you mean if Biden wins and the Senate goes, the so-called blue wave or blue sweep or whatever you want to call it, there's going to be so mumuch stimulus passed, going to make $2 trillion, what they're talking about now, look tiny, that it can do, the effect is going to be just to jack the stock market for a year or more.
I think that's right. As we know, and it's rhetoric, right? But it's kind of true too. The stock market looks 6 to 9 months out. And in a Dem sweep, we can kind of see what's going to happen or what's likely to happen in 6 to 9 months, which is huge stimulus plan, easy Fed. That's the short term. That's what the market will be digesting in 6 to 9 months. The longer term, that's dicier. In the longer term, it's probably higher regulation, higher taxes, less business friendly, but that's 12 to 18 months out. And I don't think that's where the market's looking right now. So short term, I think it's pretty favorable.
Yeah, I mean, Goldman Sachs, by the way, they put out a note kind of suggesting the same thing. I think it was one of the Morgans, JP or Morgan Stanley, or maybe both of them, by the way, kind of had that similar thinking.
They're
because
all the same.
We talk about tax hikes, but even if investors, our viewers, are worried about tax hikes, those would take probably 2 to 3 years to not only pass into law, even with a blue sweep, but then to enact. And so that's kind of the thinking, right?
Well, I don't know that it would actually take 2 to 3 years to pass tax hikes. And I heard a really interesting argument by a political strategist who said, actually, the tax hikes would have to come in the first year of the presidency under a Democratic sweep, because that's when they know they have the most power. And then in the second year, they're going to start to look at midterm elections. That's where they could actually lose the Senate again. And then after that, you know, who knows, depending on which way the Senate goes after midterm elections. But I think the thing is, in that first year, if they have just 1 year, it's not going to be wild tax overhauls, right? It's just going to be things like the low-hanging fruit. So maybe the carry trade would be impacted. Maybe the capital gains wouldn't. We think corporate tax rates would go up. I'm not sure what would happen on the individual levels. So I think there would be immediate tax increases, but I'm not sure how severe long-term or long-term problematically they would be in that first year.
All right. I want to go through a couple of stock names, Jenny. We're going to play a game. It's going to,
sure.
Since other shows, they've taken our mystery chart. They'll probably have the RBI, so they steal our ideas. So I'm going to steal theirs. We're going to call this Would You Rather. Are you ready? Would you rather own?
Ooh, I'm so ready.
Only because I love Fast Money and the whole team there. I'm going to steal their ideas. They won't mind, I hope. 5 at 5. Goldman Sachs or PayPal?
Goldman all day. Do you want my reason, or are we just going down the list?
No, just give me a quick reason. Blast it out.
Okay, relative valuation. And it's interesting, too, because you saw that JP Morgan headline this morning saying JP Morgan starting to compete with Square and PayPal. PayPal is valued at, hold on, I've got my notes. PayPal is valued at 45 times earnings. Goldman's at 8 times earnings. PayPal's expectations are through the roof. Goldman's, as you could see last week, expectations were for nothing. It'll be easy for Goldman to beat. It'll be hard for PayPal to beat.
Disney or Netflix?
Disney all day long. Same kind of relative valuation argument. Netflix, you've got a 60 to 70 times earnings expectation. You've got huge expectations. I mean, look at just this morning. They thought they were going to add 3 million subscribers. They added 2. That's still a great number.
Yep.
And your earlier guest used exactly the right phrase, victim of its own success. You could also say the law of large numbers is catching up with some of these big high flyers. It's going to be hard to beat the numbers that people are expecting.
GM and its electric Hummer, GM and the electric Hummer, or Tesla?
Well, again, I'm going to go with GM all day long. I actually made a Twitter bet with Jim Cramer on this, which I don't think he knows that I made with him, but that's okay. I'm winning on the, I bet him an ice cream cone. I don't think he knows. But I'm actually winning on the GM versus Tesla bet, and that's a pure relative valuation bet too. You've got Tesla trading at what, like 500 times or 1,000 times something earnings. You've got GM dirt cheap.
Yeah.
Actually, if you look out, if you look out to future earnings, they're not that far off.
Shepard Smith here. Thanks for watching CNBC on YouTube.